This is the question I heard many people ask today. Is it time to give up on the home builders? I've been a big fan of this group because we've had a strong economy, low interest rates, and for a long time, these stocks were huge winners. But this week, the home building stocks have fallen apart. It only got worse today when Toll Brothers reported a surprisingly weak quarter. Toll's one of the best-run operators in the business, maybe the best, and they serve high-end clientele. Yet their sales and earnings disappointed this quarter. It was a jaw-dropping surprise. In response, the stock plummeted more than $6, nearly 15%. The whole group got hammered. The market's giving up on the home builders, but is that the right call or overreaction? Let's dig deeper with Doug Yearley, the chairman and CEO of Toll Brothers.
Jim, nice to be here. Thank you.
Doug, you and I both know, uncharacteristic. Beginning of a trend or one-off?
I think it's one-off. We had a really tough quarter. We had a really tough day. We made some mistakes this quarter. We had some operational mistakes at one community in particular that did not deliver $67 million of revenue that it should have. I'm embarrassed by that. We had some guidance for the full-year gross margin that I think disappointed the street, and that upsets me. We got a little information a little bit late in the quarter, and it's unfortunate because we pride ourselves on transparency, and it's been a tough day. But no, we will not give up on the home builders. We will not give up on Toll Brothers. The future looks good. Our order growth this quarter was up 31%.
Right. Well, what, 67 million? I mean, that's not nothing to sneeze at. What happened?
It's a large master plan community with all condos, much like it's not a high-rise like New York City, but it all gets built at once. And we've run into a lot of complications. We had bad weather in San Francisco last year. It slowed us down. We had cost overruns. We thought we were going to deliver a lot more units this quarter than we did. They're delivering next quarter, but we missed it and we blew it.
And you had coronavirus in Southern California. I didn't know that there were that many foreigners coming here from China.
You know, it got overstated a little bit today by Reuters. What I said on the call today when asked was, how is it affecting us? We have 11 buyers in California that are Chinese and have asked to delay their closings because they can't get here, they can't get their money here. That was the extent of it. Okay,
but then you start saying, okay, Reno 14, Jacksonville 18, Northern Virginia 13, Dallas 8. And you start thinking, wow, this isn't Toll Brothers. This is companies that never have these kinds of niggling mistakes.
Well, there's other places where we beat our numbers. Okay, so I was pointing out the worst.
Right.
But you're right.
That is part of the problem with that conference call. I mean, you decided you were very Philadelphian. I mean, all you did was you said everything that's wrong. You didn't give us a lot that's right. I mean, you can still make the playoffs, Doug.
Well, we may win the Super Bowl if the Eagles can get it going here. But, well, you know, the questions, it was a pretty fired-up group today, so there wasn't a lot of opportunity.
Jeez,
and today wasn't a day to promote. Okay,
no.
Today was a day to recognize our mistakes, talk about them, and talk about what we're going to do to fix it.
Okay, so then why did you buy so much stock back?
Our book value at the end of this year is about $39, $40. We have a fantastic balance sheet that allows us to keep buying a whole bunch of land. We can buy a bunch of home builders, which we've been doing lately, and we have ample cash to buy stock back. And when our stock sits around book, we are buyers.
Well, it does make sense because this is actually true book. And I know your company from when it came public. And you guys do not overstate book. But the one thing that did worry me was that you talked about how it's getting harder and harder to buy land. This is one of my worries, that environmentalists, of which I like to count myself one, have tried their best to try to make it so that there's not a lot of tracts that can be developed. How do you get around that?
It's difficult. Part of it is our expansion, because the Northeast Mid-Atlantic, New Jersey, New York, Connecticut, Boston, Washington, D.C., which is our home area, it's very tough to find land there that you can get approved. So we've moved into other places, Jacksonville, Texas, Boise, Idaho, a lot of different markets where the entitlement, the approval process is easier. So diversification is a big part. But when we get that land at Main and Main and we get it approved, it's gold.
So what happens if we do have the epidemic that you and I don't want? Will people not even look at homes if there's bargains and interest rates are so low?
I think people will be on the sidelines for a while, particularly with the stock market. If the stock market does not stabilize, then I think there's going to be a lot of people that are going to wait and see. But I think owning a home is such an important part of one's life that I don't think if you are ready to move, you're ready to have your family move up in life, that you're going to sit back because of the coronavirus. But I think we do have to see how it plays out. I think the next couple of weeks are critical in terms of the impact it has on the market and whether we make some progress on controlling it. So we'll have to see what happens.
Okay, I think people should know that this is not the toll that just makes $700,000 to $800,000 homes. You've got that $500,000 home for people who finally are ready to move out. I think that's a natural with low interest rates.
It is, and 40% of our communities today have a home with a base price under $500,000. So we've talked a lot about affordable luxury lately.
Right.
We are going to continue to focus on, being America's luxury home builder, but that does mean having a wider net. So we will do more and more lower price, still luxury communities,
right,
particularly with lower rates.
What does Doug Yearley do when he knows that there are people who work for his company that did not deliver, and yet he knows that the buck stops with you?
It is my responsibility to fix it. We are in the process of fixing it, and there will be some changes made.
Okay. But we're going to have to hold you that, because I've got to tell you, when you bought all that stock back, to me it meant that you've got a brighter future. You do have a strong economic market, as you say so yourself. And I did believe that Mr. Toll could not be happy.
Mr. Toll is not happy. Mr. Yearley is not happy. There are many, many people in our company that are disappointed. And as I said when we started, I am embarrassed because I feel like I let down investors, I let down employees, and that's not right. And we are a great company, and we will fix it. This is one bad quarter in a long, fantastic story with a great future.
We are going to hold you to that, Doug.
Please do.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.